Hello, Tradespooners. Let's take a look at today's pick for January 22nd, 2014. We're looking to go long Generac Holdings, GNRC. Taking a look down below at our proprietary Tradespoon risk reward, we're at the mid-range of 5. And on momentum, we're actually on the high end at a 7, so 1 to 10. Now, we're also going to take a look at a deeper analysis report. You can just click here, and this will take you to our proprietary analysis, both fundamental and technical. Here at Tradespoon, we offer a full report for those of you that want to really dig deep into that research report. Let's get into the price action for GNRC. The close of the stock was at 51.58 the evening before this pick came out, and we're looking at a 52-week high of 57.29 and 52-week low of 32.41, so we're well off those lows. We see a volatility change of 100%. That means that the implied volatility is at its highest levels it's been all year. So that means there's a heightened expectation of potential movement, and we'll get into what some of those potential catalysts could be. If you're looking at the return on capital, again, you can just hover over the question marks for those of you that are new to Tradespoon, and those that are veterans. These are new additions that we've offered. Return on capital calculations, you're looking at a 67% return on capital. And those are based on the option transactions that we're putting out there. And the probability of success, we're seeing it right now at about a 58% for this long transaction. The estimated move going into February expiration is around $5.50. That has about a 50% probability of potentially moving either up or down. This estimated move calculation is not directionally biased. So let's take a look at the picks. The stock trade is to buy stock GNRC at a limit of 51.58 or better. Now, once we're filled at that limit price, we're going to put a target gain. In this case, we're going to put a sell order above our entry price, specifically above by $6.20, which will roughly get us out at around $57.78. So we'll have that out there good until cancel. We'll also put a sell stop below our entry price by $6.20, which will roughly get us out around $45 and some change. And again, you will work those good until cancel, and your broker should offer a contingent, which is called one cancels other. Now on the options trade, we're looking to buy the February $50 calls. Now we want to put in a limit order of $3.40 or better. And then if we're filled at $3.40 or better, we're going to put a profit target above our entry price. In this case, we're going to put it in at around $6.80, and that is a sell limit good until cancel. The risk we're going to take is the maximum we pay per contract, $3.40 or $340 per contract. And again, use prudent size management. For the stock, we're suggesting somewhere between 3 and 5%, and for the option strategies, no more than 5 to 10%. And be very prudent, especially those of you that have smaller accounts. For the option spread trade, we're looking to sell the February $50 puts and collect $1.85. So we're going to get a credit here. We're going to buy the $49 puts for $1.45. So the net credit for this dollar put spread, the difference between 50 and 49 a buck, is 40 cents. So that's our maximum profit. Our risk is going to be 60 cents. That is if, in fact, the stock was down below $49, the difference between the strike prices minus the premium received is 60 cents. That is the max risk. Now, our max loss that we want to take on this is 80 cents. So you would put a buy stop on this particular spread of around 80 cents. If the spread is trading for 80 cents or right around there, you would be closing this transaction. Now, again, you can always use our virtual trade here at Tradespoon, and you can start utilizing these strategies in a virtual environment until you work up, first of all, the understanding of what these transactions, these strategies are all about, build up a risk and capital management strategy as well. Now, I had mentioned that volatility, and I'm going to scroll down here, is at 100%, and let's just take a look. As you can see, it's actually popped up pretty considerably from the lows, and it's getting up into that range, and right now it's at 34.70. So it is well off those lows, folks, which means that there's a heightened expectation of potential movement. Now, what could be the driver behind that? Well, not only the price action, as you can see, it's been dropping off significantly over the last few sessions, but we always want to keep track of earnings. And the next earnings date is going to be midway through February. As a matter of fact, specifically February 13th, which is very important to understand because for those of you that are trading February options, that is before expiration. So we have an event that we need to pay attention to going into expiration, and that is earnings. And then you can see the other fundamental and technical components that we pull out, as well as any news and commentary in this section. Great section to keep your eyes on as you look to execute this particular pick. And as always, if you need any help, you can email us at info@tradespoon.com. Keep an eye on the recent picks as well as the recent performance by clicking on these two areas. And for those of you that are looking for a tool to find more trade ideas, from Tradespoon Pick of the Day, and you can go in and use our proprietary model to go in and screen for ideas based on volatility, technical trends, or all. And all you have to do is specify a specific time horizon, a risk tolerance, and your directional bias. And there you go. You can have all those ideas that you can start digesting and start thinking about the particular strategies that we've been putting out there as picks and see if there's another viable opportunity. Well, that's it for today's picks, and we look forward to seeing you tomorrow.